Hey everyone, Al Barola, Financial Intelligence Training. It's Friday, it's July 6th, it's 2018. 1 week from today, we start earnings on Friday the 13th. Now, I'm sure that's going to have nothing to do with impacts on earnings, but let's hope that Jamie Dimon doesn't have to cross a black cat on his way to work. All right, so kidding aside, hope all of you had a great 4th. We're back. It seems to me that LeBron had a great holiday, fresh off of his new contract with the Lakers. And if you follow me on Twitter, well, you know I've been calling for that move for some time now. So job numbers came out today, and the team's going to be looking at the data over the weekend to crunch down on which phase we currently live in. Financial intelligence training students know how important the macro implications are in proper dressing of the portfolio. And job data, along with GDP, productivity, output capacity, all have major roles in determining which economic phase we're in. Now, switching from the macros to the technicals, we had a rather interesting week, and some serious support levels were tested. Now, most of last week, we saw rallies being faded. So when I see this type of market behavior, it's concerning to me. As a reminder, in bullish environments, good news is bought and rewarded, and bad news is forgiven. Well, we weren't seeing that last week, and that's understandable, especially with the rhetoric of trade wars lingering out there. Last week, I gave my stance on that rhetoric. This week's action gives more color on what I meant. So if you missed the post, I'd suggest going back and watching it. It'll certainly provide a little bit more insight. Now, we've started the process with $34 billion in tariffs officially being rolled out. But as most of you know, the $200 billion in the balance can't really occur until the fall. Now, I mentioned in a much earlier post that I didn't think we'd have any type of trade war, especially with midterm elections. Although it seems that perhaps the strategy is to have a trade war or the threat of one for midterm elections. The right seems steadfast in the support of nationalism. Now, let me be clear, that's not a political statement. It's more one that it's market-centered. So until we have a full-blown tariff in place, to me, well, it just remains noise. So now to the technicals. The important levels were held. The Dow had been somewhat rebellious with its recent visitation sub the 200-day moving average. Yesterday was the first day it closed north of the level in 6 sessions. Now, the teacher's pets, sort of the Russell, the NASDAQ 100, well, they've all managed to hold their 50-day, which is good news, and they're all clamoring for their gold stars and their homework passes. Now, of course, I kid with this kind of humor, but it's no joking matter. You see, the mighty continue to do all the heavy lifting in this narrowing market. Now, the 3 key areas that I love to watch, they're not offering massive reinsurances either. At least currently they're not. The financials, well, they remain in a flat base, hence my big focus on next week's earnings, and more importantly, the reaction to those earnings. The transports, not so awesome, just getting back above their number. FDX, Federal Express, not helping any at all right there. And the important semis, well, they're just getting back above their 200. Go figure, as the tech-heavy NAS leads the path. As always, I encourage strict adherence to your discipline and knowing what you're going to do in advance when changes are warranted. For those trading these moves, guys, remember stock and stock options involves a substantial degree of risk. It's not suitable for all investors. If you're a chart watcher like me, you got to remember past performance is not necessarily indicative of future results. Guys, I'm Al Barola, Financial Intelligence Training. Thanks for watching, everyone. Have a great weekend.